So, good morning, everybody. My name is Anthony Maldonado, and I would like to welcome you all to today's Employee Retention Credits webinar with guest speaker Rick Liuag. We are recording this session for anyone who is out there listening to it. Welcome. And for those joining us live, welcome as well. Just a few things that I would like to touch upon before we get started with today's program. And that is, I want to announce our Coffee with an Entrepreneur on June 13th with Lena Thomas. She is the owner of Corona Hardwood, and we would love to have you join us here at the Corona Chamber June 13th, 8 a.m. She will be giving her story on how she became an entrepreneur and how her business grew coming from an immigrant background, just coming to America and really living that American dream. So we are really excited to have her joining us, and we look forward to hearing her speak. And also on June 17th is our Good Morning Corona. This is our keynote presentation that day will be our Executive Leadership Roundtable graduation. We still have a full and engaging program set up, so make sure to register now. We also have a few exhibitor spots left, so talk to Stephanie if you want to claim one. I will go ahead and put all the links to these two events in the chat for anyone who wants to check them out closer and register. And with that, I want to pass it off to today's presenter for this highly informative webinar. So Rick, go ahead and take it away.
Hi, Anthony. Good morning. And first, I want to thank you, Anthony, and the Chamber for sponsoring this and putting this together. There's going to be a lot of great information. I know you're recording it. And what we're going to do, just for the sake of time, Anthony, I'm going to hold questions off until the end because I'm going to go pretty quickly. There's a lot of information to cover, but I'm really just going to glean over this ERC. I'm going to get started and share my screen now. So what we're going to be talking about today is the employee retention credit. And for those of you that have heard of it or haven't heard of it, you're going to get a lot of valuable information. And I promise in the next 15 or 20 minutes, you're going to hear something that's going to be of value to your business. What I'm going to cover in today's workshop is what the ERC actually is, what businesses qualify for the tax credit, common misconceptions about the employee retention credit, and why you should use a firm that specializes in ERC filing if you want to apply and see if you're eligible. But first, before we get into that, you probably want to know who the heck I am. I've been in the financial services industry since 1987. So I'm old. My picture's over here on the right. And I think Stephanie, my wife, wished I still looked like that. But I was actually one of the first 100 individuals in the United States with an insurance and a securities license to go inside of a retail bank and work inside of the bank. In 1988, that was very novel. In fact, it was against the law prior to 1988. Now today, 40 or 35 or 40 years later, you go in any Wells Fargo or Bank of America and there's a desk there that says investments. It's pretty common now in most banks. Well, it was novel in 1988. I was one of the first individuals to do that. And since then, my private practice specializes in retirement plans and tailoring benefits for business owners primarily. And what we really do is we show them how to save money dramatically on their benefits packages, and then they use that savings to fund their retirement plans for their businesses. And we help their employees and we help them. What is the employee retention credit? Actually, the employee retention credit is a part of the CARES Act. The CARES Act was passed on March 27th, 2020. It's a $2.2 trillion stimulus package that was designed to provide financial aid to individuals and businesses in response to the economic fallout of the COVID pandemic. The primary aid to businesses came from three programs within the CARES Act. The first one was the Paycheck Protection Program, which 99% of the businesses in the United States have heard about and benefited from. The second was the Economic Injury Disaster Loan, or the EIDL, which fewer businesses have heard about or benefited from. Now, the first two are actual loans. They were loans from either a small business association, a bank, or the government. The third one is the employee retention credit, which is not a loan. It's actually a tax credit that allows the business to get a tax refund. In a nutshell, the employee retention credit is really nothing more than a refund of what we would call overpaid payroll taxes. Okay. The ERC is a payroll tax credit. And make note of this, it's up to $26,000 per W-2 employee retained during 2020 and 2021. According to the IRS, the average tax credit nationally is about $17,000. So if you have a small business and you retained 10 W-2 employees through 2020 and 2021, you could be eligible for up to $170,000 as a tax refund, which is not a loan, so you don't have to pay it back. And because it's a tax refund, your CPA would probably in 99.9% of the cases tell you that that refund was not taxable. As you'll see, some of the clients that we've had, it's been life-changing for their business. So what businesses actually qualify for the ERC? Well, any business that retained W-2 employees during the period of March 27th, 2020 through September 30th, 2021, and was negatively impacted by the pandemic. And you're probably smiling because it literally impacted every business, those that are still in or stayed in business. Now, according to the IRS, 9 out of 10 businesses that qualify for the employee retention credit aren't even aware that they're eligible for a refund. And here's the reason why, is the government was giving commissions to the SBA banks that promoted the PPP. So everybody had heard of the Paycheck Protection Program because they were promoting it, it was advertised, and every bank and every brokerage in the country was getting paid. So there was billions of dollars that were generated in commissions and administrative fees to promote the PPP. There are no commissions paid for the EIDL or the employee retention credit. So needless to say, banks aren't promoting it. They're not getting paid to administer it, so they don't really care. There's two primary qualification categories. The first one is the partial or complete suspension of operations, and that's very ambiguous. And in fact, because it's so ambiguous, 99% of the businesses in California that remained open fall into this qualifying category. The category that most people have heard of, or they think they have to qualify for to be eligible for the ERC, is a loss of revenues in 2020 and 2021 versus 2019. Now, here's the thing to keep in mind if you're making note. You don't have to qualify for every one of the qualifiers. It's not an all or nothing. You only have to qualify in one category, in one particular segment for you to qualify for the ERC. And if you'll notice, and when you go to our website, you'll be able to see more about this on what actually constitute a suspension of business. So you can see, if you take a closer look, if you're in your business, you had to implement social distancing requirements, if you had to reduce your hours of operation, if there were any distribution delays from your suppliers or your vendors, if you couldn't get things out in time, supply chain disruptions. And then here's the one that most businesses qualify for, is if they had to suspend having on-site meetings, if they had to do meetings remotely via Zoom. So if you had to do any of those qualifying factors, you'd be eligible for the full ERC refund. There are common misconceptions about the employee retention credit. The first one is, I don't qualify because my revenues did not decline from 2019. That's false. As I showed you before, there are other qualifying events which could make you eligible for the employee retention credit. Primarily, did you have to shut down your business at all and suspend operations? That's the primary one. The other big one is, well, I received a PPP loan that was forgiven. Well, that's false. You still can qualify. If you got a PPP loan, here's how your employee retention credit tax refund is impacted. Let's just say that you got a PPP loan for $100,000 and your employee retention credit gets you a $170,000 tax refund from the IRS. The IRS will reduce your tax refund of $170,000 by whatever you got in the PPP program that was forgiven. So you would still net $70,000 from your employee retention credit. Here's another one that's really interesting to me, is nonprofit organizations are not eligible. That's absolutely false. And here's why. Even though nonprofits like the chamber where Anthony works, even though they don't pay income tax, they do pay payroll tax. And remember, the ERC is a tax refund based on a payroll tax credit. So it's got nothing to do with income. It's the tax refund comes from your overpaid payroll taxes. Actually, my CPA told me I'm not eligible. Well, most CPAs are not very versed in the ERC. And I'll tell you why in just a couple slides, but it's primarily because most CPAs don't deal with payroll taxes. They specialize in income taxes. So if your employee tells you that you're most likely not eligible, I would recommend that you used our firm or found a firm that specializes in nothing but ERC, because the chances are very good, as you'll see in just a minute, that you may very well be eligible and your CPA doesn't know how or why. Why should you use a firm that specializes in ERC filing? Well, the primary reason, in my opinion, is that most CPAs aren't familiar with the ERC, as I said, because they don't specialize in payroll taxes, okay? And just to give you an example, my very own CPA this past March, when I went for my tax appointment, I asked her, I said, Marion, what do you know about the ERC? And she says, well, you don't qualify. And I said, well, I know that. I don't have any W-2 employees. However, what about you guys? You have about 15 employees, W-2s, and I know you stayed open during the pandemic. She said, oh, I checked into it in 2020 and we're not eligible. So I said, well, why don't you go on the IRS's website? They revised the ERC and amended it in 2021. So she went on there while I was sitting there and she said, oh my God, Rick, we qualify. We qualify now. I didn't know that. So she started referring her clients over to me and my firm so we could help administer that ERC tax credit for her and her clients, because she didn't really know much about it and didn't do it. Some ERC clients have found that ERC benefits and ERC companies that specialize in it got them 3 or 4 times more in their refund than the client's CPA actually thought they were eligible for. So it doesn't hurt at all if your CPA says, I can do this for you. It would not hurt at all to get what I would call a second opinion and see if a firm that specializes in ERC filings can get you more, because they are probably much more versed in the tax consequences of the ERC than a CPA is, again, because it's a payroll tax issue, not an income tax issue. And most CPAs in the country think that this should be handled by the payroll company, and the payroll company thinks it should be handled by the CPA. Ergo, most small businesses haven't heard about this. Now, I'm finding that larger businesses that have more sophisticated tax advisory firms, businesses that have 4, 5, 300 employees, their tax advisory firms are on top of this and they've heard of it. But most companies, small businesses that use a bookkeeper or they do all their payroll in-house, or their CPA just hasn't paid attention to this. They've not even heard of it. And you're going to see some of the refunds that some of these small companies have got have been significant. And I'm going to talk about those right now. These are actual tax refunds of clients and actual personal friends that I have. The first one, when I got back from my meeting with the IRS in February, where I learned about this, and I'm kind of remiss that this had been around since March of 2020, and in February of 2022, it was the first time I'd heard of it. And I felt embarrassed because I'm usually on top of this kind of stuff, even though I'm not a tax person. I'm a benefits person, and I would have heard this through the grapevine. Everybody had heard of PPP. I benefited from the EDIL, but I'd never heard of ERC. So my first week back from Vegas at this convention, I'm talking to a good friend of mine, and I said, John, have you ever heard of the employee retention credit? And he said, Rick, it's the only way we were able to stay in business through 2020 and 2021. He said, we got back $465,000 and we have 22 employees. And I asked him, I said, how'd you hear about it? And he said, well, our payroll company told Karen, his wife, who's their accountant, by the way, she's an accountant. Our payroll company told us about this ERC, and they said to us, we don't do it, but you probably are eligible. So because his wife was an accountant, she went and did all of the homework, found out, and I asked him, was it a pain in the neck to get it? And he said, absolutely. We had to jump through so many hoops. We had to do this. We had to research it. And I said, would you have taken advantage of a firm that did it for you if you could have? And he said, absolutely. He said, we're not even sure we got everything that we were entitled to. So John's small company, 22 employees, got $465,000 back. The next one that I can tell you about is a 40-employee commercial real estate company got over $900,000 as a tax refund. A good friend of mine, 8-employee veterinarian office. She got a large PPP. Her net for 8 employees was $55,000. And for a little small veterinarian office, that was significant. A 31-employee janitorial service up in Northern California. Here's her report right here on the right, down in the lower. She had 31 employees. She had no clue that she was eligible for this when she turned in her paperwork, and when ERC benefits got back to her and said, hey, this is what you're eligible for, she started crying. So she got somewhere in the neighborhood of 552, not 562, but she got $552,000 back in her tax refund. And one of my favorite stories is, this isn't one of our clients, but I've heard of this from somebody else that is doing this. They had a 350-employee construction company that they came to their office and said, I think you guys may be eligible for the employee retention credit. Well, the CFO of the company went to their CPA, and the CPA told them, you're not eligible. No need in filing. You're not eligible for the employee retention credit. Well, come to find out, after going through the process with an ERC specialist, they got back $6 million. Well, the first thing they did is they changed CPA because they said, look, not only did you not tell us about this, you told us we weren't eligible. Now we end up getting back as a tax refund $6 million. So if your CPA tells you you probably don't qualify, I'd recommend, like I said, getting a second opinion, because this is not the only story I've heard of a CPA thinking that their client was ineligible when they actually were eligible. What to do if you want to see if your company qualifies? Well, that's easy. Just go to erc-information.com, and you're going to fill out a little short survey on a website, and you'll know within minutes if you're going to be eligible or not. It's a little short survey. You don't have to supply any documents or information. If we find that you are eligible, then the next step is just to go through the process. You're going to be assigned an actual concierge specialist that'll walk you through the entire process. Here's the nice thing about the ERC retention credit application process. You already have all the documents. You already have your tax returns. You already have your 941 payroll statements from every quarter of 2020 and 2021. You've already got those. You had to submit them throughout the year. So you don't have to create any new documents. You don't have to do anything new. You don't have to jump through hoops. It's basically you're just going to upload your tax returns for 2019, 2020, and 2021 and your 941s. It'll all be secure. Nobody's going to see it except the specialist. And then they'll come back and tell you, this is exactly how much you're eligible for. So you'll upload those tax documents in a secure fashion. There are no upfront costs. So if you decide to become a client and you want ERC benefits to process your application, the fee is 15% of your actual tax refund after it's received from the IRS. So it's easy and painless to see if you're eligible. It's easy and painless to go through the process. We do all the work. And then it does take about 4 to 6 months to get your tax refund back, but it comes from the Internal Revenue Service. If you have any doubt that this is actually a real thing, you can simply go to, let's see if I can move this. Just go to the IRS's website. There's no ambiguity here. Everything about compliance and legality, and if you're going to get thrown in jail or if you're going to be, it's all right here on the IRS's website. So it's all above board. It's not anything that's kind of in the gray area. It's a tax credit. It's very simple. And when you go to our website, you're going to see, you just click right here that says get qualified. It takes you just a few minutes to go through that. And it's very, very simple. And that's the employee tax credit. Now, there are a lot of moving parts to this on how you qualify, but let's see, we can send you this, what the qualifications are, but really you don't need this. All you need is to go through the survey, submit, and let them tell you what you're eligible for and how much. And that's it. Anthony, I'm open for any questions now. If anybody has any questions, I'm happy to answer those.
Thank you so much, Rick. Like you said, open for any questions. So feel free to unmute yourself, ask a question, or post it in the chat, and I will ask it.
Okay, it's pretty simple. Just go to our website and check it out.
Hey, Rick, I have a question. This is Lynn Hounsley. I may have missed it, but is there a deadline?
That's a great question, Lynn, and I'm sorry I didn't cover that. You are going to hear that there is a deadline, and the deadline will be December 31st, 2024. And here's why. The qualification period was from March of 2020 when they passed the bill to September 30th of 2021. However, this is why the deadline will be 2024, is because you have 3 years to amend previous year's tax returns. And that's basically what we're doing for you, is we're amending the tax returns, and you've got a 3-year window to submit those amended tax returns. So at the end of 2024, this will all be gone. So if you don't take advantage of this employee retention credit by the end of 2024, you've missed the window. Okay.
Got it. Thank you very much.
Sure. Anthony, anything else?
No, Rick, that is all. Let me just ask John or Dennis, do you have any questions or comments that you would like to include or ask of Rick?
Everything's right there on the website if you want to pursue it. And yeah.
All right, awesome. Thank you so much, Rick. And that is how you contact Rick. His information is there. We want to thank you so much for joining us today. I definitely learned a lot. I did not know of this tax credit or employee retention credit. So thank you again, Rick, for sharing with us. And like I mentioned, this is going to be recorded and posted on our YouTube page. We will be sending out some e-blast with the recording as well. So stay tuned for that. And with that, thank you so much for joining us this morning.
Thanks, Anthony.
Thank you.